The capital budget consists of capital expenditure and revenue. In capital expenditure or capital payment. The capital payments consist of capital expenditure on acquisition of assets like land, buildings, machinery, equipments, as also investment in shares. The capital payment or expenditure. Capital payments consist of capital expenditure. Capital payment consists of capital expenditure on acquisition of assets. Acquisition means getting. Capital payments consist of capital expenditure on receiving of assets like land, buildings. These are the capital expenditure. Assets like land, buildings, machinery, equipments, and investment in shares. Investment in shares, example, for building roads, government has to give necessary compensation for the land owners. Government giving compensation for the land owners for building roads. The government has to give the necessary compensation for the land owners. Then second financial budgeting is revenue budget. There are 4 types of budgeting, and first one is financial budgeting. Financial budgeting, first one is capital budget, then second one is revenue budget. Revenue budget consists of revenue receipts of the government, that is revenues from tax and other sources. Revenue budget consists of revenue receipts. Revenue receipts are the revenues from tax and other sources, and the expenditure from these revenues. So revenue budget consists of revenue receipts and revenue expenditure. Revenue budget consists of revenue receipts of the government. Revenue receipts are the revenues from tax and other sources. Revenue expenditure are expenditure to meet these revenues. Then first one is revenue receipts. What are the revenue receipts and what are the revenue expenditures? Revenue receipts are divided into tax and non-tax revenues. Revenue receipts. Receipts means give. Receive. Revenue receipts are divided into tax and non-tax revenues. Tax and non-tax revenues. Then tax revenues are made up of taxes such as income tax. Income tax is all salary. We are giving to some, for example, doctor's salary, they will give tax. From their salary they will give tax. That is the income tax. Then corporate tax. What is corporate tax? Corporate tax is the large company or group. The tax from the large company or group. That is the cess or surcharges from the domestic goods. The goods prepared from their company. That is the corporate tax. Corporate tax is the cess and surcharges for the domestic companies. That is the corporates are the large company or group. Then excise tax. What is excise tax? Excise tax means tax on the manufacture of goods. Excise tax means the taxes on the manufacture of goods. Then customs tax. Customs tax means tax from import and export goods and services. Tax from import and export goods and services. These taxes which government levies. Government levies means government charges. The tax revenues are made up of taxes such as there are two types. Revenue receipts consist of two, tax and non-tax revenues. Tax revenues are made up of consist of taxes such as income tax, corporate tax, excise tax, customs and other duties, which government levies. Levies means charges. Then non-tax revenues consist of interest and dividend on the investment made by the government, fees and other receipts for the services rendered by the government. Non-tax revenues consist of interest and dividend on the investments made by the government, fees and other receipts for services rendered by the government. Then what are the revenue expenditure? Revenue in receipts and revenue expenditure. Revenue expenditure is the payment incurred for the normal day-to-day running of the government departments and various services that it offers to its citizens, like subsidies. Revenue expenditure. Expenditure is the payment incurred for the normal day-to-day running of the government departments. For example, salary of the officers, all the government running day-to-day running of the government departments and various services that it offers to its citizens, like example subsidies we are giving. Not the government is giving subsidies for gas subsidy, then farmer subsidy, like that. These subsidies are giving for the these subsidies are given the government for the social good. Subsidy is the benefit given to an individual or business or institution by government for the social good. This is the revenue expenditure of the government departments and various services and subsidies. Then third one is zero-based budget. Zero-based budget. In financial budget, first one is capital budget, then revenue budget, then zero-based budget. In zero-based budgeting, the budget request has to be justified in complete detail by each division. The manager starting from the zero base. Zero base is indifferent to whether total budget is increasing or decreasing. That is, zero budgeting is different from the total budget. Zero budgeting may be increasing or decreasing. What is zero budgeting? Zero budgeting is the give all the expenses. Zero budgeting calculate all the expenses. All the expenses means even small expenses that should be included in the zero budgeting. Zero budgeting is the budgeting the all the expenses. This is for the better allocation of the sources. Zero budgeting is the from the zero base means even little expenses that should be included in the budgeting. That is zero budgeting. And zero based budgeting, the budget request has to be justified in complete detail by each division. Each division means even if small expenses that should be added in the zero budgeting. Manager starting from the zero base. Zero base means small, all expenses, even if small or big. The zero budgeting is indifferent to